Welcome to Bell2Bell podcast, powered by IBN. This original audio production delivers market and sector insights, as well as exclusive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBN or one of the 60-plus investor-focused brands within IBN's dynamic brand portfolio. As a multifaceted financial news and publishing company, IBN leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBN may have received compensation to produce this audio content. Please be sure to read IBN's entire disclaimers for full disclosures. Now sit back, relax, and enjoy the next revelatory episode of IBN's Bell2Bell podcast.
Hi, and welcome to another exciting show where we bring you all the nuggets and insightful bits of information to help you do your due diligence on amazing companies doing impactful things. With me today, I have the CEO and president of SolarBank Corporation. Now, SolarBank Corporation operates as an independent, renewable and clean energy project developer, a power producer and asset operator in both Canada and the US, focusing on solar photovoltaic power generation projects, battery energy storage systems, and EV charging projects, listed on NASDAQ as SUUN. With me, I have President and CEO, as mentioned, Dr. Richard Liu. Welcome. Very excited to have you here today.
Thank you so much, Kamal. It's a great pleasure to be here.
Wonderful. As a start, tell us, a little bit more insight that you can give us on the description, the mission and vision of SolarBank Corp.
I think, Kamal, you look at the civilization over the years that originally, we depend on the sun give us a light to do agricultural initiatives. Later on, we depend on the little light from oil to break the darkness in the night. As we get into industrial world, we have electricity, and electricity has been in everywhere of our lives, not only, keeping the lights on, but also keeping us connected now with the digital economy, right? So all of this, you think about it, what's driving it, right? The driving force actually is electricity. And we, from SolarBank perspective, actually is a clean and renewable power supplier. We deliver the electricity from non-fossil fuels to non-emitting sources to keep your lights on and keep your phones on, to keep you connected. So that's the mission and the vision that we've been carrying on personally since 2003, 22 years ago, as a company more than 12 years ago.
Excellent. A wonderful industry to be in, and so revelatory right now. It's a very important industry that we're tapping into. Energy, as you mentioned, is everywhere. And a big part of all that we do. Now, your development pipeline exceeds 1 gigawatts, while completed projects are at 100 megawatts. What specific milestones should investors watch for in the next 12 to 18 months as you execute on this pipeline? And then potential bottlenecks. Tell us what's keeping you up at night as well.
Yeah. So as you mentioned that, we currently have delivered projects to commercial operation, to the Charlies, to Honeywells, to True Green Capitals. We just signed a $50 million contract with QCell, delivering them projects. And in the meantime, in Canada, we are building 60 megawatt hour battery storage and financed by the Royal Bank, which we will own, right? So as you can see, that this vertical integrated company doing from development, build, operate, and owning them are full speed ahead in chunking through the pipeline. In the pipeline, we have projects in solar, projects in battery storage, projects in EV charging, and that 1.2 gigawatts actually are both in Canada and the USA. So I would say, if you're looking forward, I will share with you what to look for in this year, what to look for in the next 3 to 5 years. So in this year, you obviously will see we are continue to deliver to the Honeywell portfolio with additional projects. We will deliver to QCell the contract, which is already announced. You can find the details in the announcement. And in addition, that we are building a portfolio with major infrastructure funds to moving large numbers of projects going forward, right? So, if you think about what we delivered the last year, and we spent 41 million Canadian all stock deal, purchased the solar flow through fund, which this team has built those projects over the last 10 years. So now it's part of our recurring revenue. We do own about $180 million worth of assets on the books. So we have a recurring revenue. And with the 36 million from Royal Bank, you can see I am already in January of this year that already equal to what we have achieved the last year. If you look at the revenue side, last year we did $60 million. As you know, $50 million of US dollar contract equal to about 70 million Canadian. So in January of this year, we have already secured a revenue is more than what we delivered last year. So that is what I think our listeners can look for in the short term. In addition to the short term, we have good revenues from as a developer, builder, and operator. I think somewhere around the $60 to $100 million. We also own asset, as you know. We started with $10 million. We probably with the battery storage with a 22-year government contract, will double it. And our goal is actually building significant ownership of those assets, right? So eventually we can deliver to our investors a due track of income and give a reliable return. That one leg is, let's say, $60 to $100 million on the revenue and another leg on the RPP. So that's people can look forward to in the next 12 to 36 months, I would say.
Exciting times ahead. Looking at the data center industry in general, this is projected to reach $395 billion by 2030. Speak to about how SolarBank Corporation will capture this opportunity, how you're positioning the company to do that, and then also speak to us about the unique advantages that your company brings to data center operators, and of course, just your market competitiveness.
Thank you, Kamal, for actually, paying attention to our announcement. We announced entering into the digital center business Q4 2024, which is about a few months ago, right? It is out of, a market analysis, right? If you look at currently what we are doing is that really we are in the commercial and industrial market, and which is very successful with the Fiora's, the infrastructure fund, a part of it. We're doing very well in community solar, but we have a few large-scale developments are currently still in development after I would say, significantly longer time than other two categories because of the interconnection difficulties. That is the delays of the interconnection, right? So we look at that's on our side. We need to find a reason, a way to deliver the power in a shorter time. On the other hand, as the world moving forward with digital economy, you can see there's a lot of announcement, a lot of demand on the data centers. They want the power. They want the power now. However, in reality, the same as we as a developer, those data centers need to wait anywhere through to 3 to 5 years to get the power to power the data centers, right? So sitting down with the industry experts, sitting down with the potential customers, we realized actually we could, repurpose or build large-scale solar, wind, battery, or gas turbines behind the data centers, right? So that we can deliver the power to the data center without the constraints of interconnection delays and directly behind the meter, and which we have done, in the past by providing power behind the meter. We actually own about 40 of those in Ontario, not for data center, but we firmly understand how the behind the meter microgrid works, right? So that's the reason that we are entering that. So to start, I would say, Kamal, there are smaller data centers in urban center because they have a short latency and in huge demand. We're looking at those ones to repurpose buildings, to upgrade existing data centers. And because of my utility background, we understand the grid, and we can work with the utility, which we're already in discussion with utilities, for identify areas where it can provide additional power to aid the development of the data centers. Right. On the greenfield, we are working at a few potential sites that are developing, let's say, 50 to 100 megawatts data centers, whether they are for AI training or whether they are for IT loads, that's yet to be determined, because I think our client will stipulate what is the requirement. Right. We are providing assistance to large, data center developers. Let's say they're building more than 100 megawatts and so forth, and we will be the one from a power perspective, right, to assist those large developments. So those are the three kind of data centers we'll get into, right? As to advantage, we are not entering the data center because we are data center experts. We are not. But we are entering data center because we are power experts. And if you look at the data center, they need a lot of power to power the computers. They need a lot of power to manage the environment so that the HPCs, high performance computers, will not overheat, right? So that's our advantage entering the data center business, combined with our clients' expertise in data center, that we can deliver the data center in a timely fashion.
Excellent. So definitely leveraging the ecosystem there and the huge demand that's coming. Now, you've recently secured $25.8 million for BESS projects, or is it BESS projects? How does this financing structure reflect your broader capital allocation strategy? And what does your project financing pipeline look like for the remainder of the 1 gigawatt development portfolio?
Yeah, Kamal, the energy infrastructure, needs a lot of capital support, right? We were able to do very well over the last 12 years because, we started as a developer. We have sufficient development capital ourselves, and we are the builder because we do the engineering, procurement, construction. We were able to manage those projects very significantly. But in the past, because of our own situations in terms of sponsor equity or the funding issues, we won't be able to own a lot of assets. But as we're growing now, we are able to own, and this Royal Bank funding of up to $36 million enable us to own 3 battery energy saving systems, have 22 years of capacity payment from Ontario Grid Operator, the IESO, right? So that basically secured every dollar we need to build them and to own them. And we are building them by the way, right? So that's where we were able to do. Going forward, we will continue to managing our project financing either from a service provider's perspective, taking example of the Honeywell deal, which is more to come, is that we signed the $41 million, or even taking the QCell example, $50 million, is that we will bring the project to NTP. And from there, we as the EPC, engineering, procurement, construction people, that we will get a milestone payment as a service provider. So we don't need to worry about the financing at all, right? However, we are working with infrastructure fund now to building a facility so that enable us to own 100 megawatts of project going forward, which involve money available at NTP that bridge it to mechanical completion mechanisms in terms of ITC, mechanisms in terms of getting getting long-term debt. At the end of the day, Kamal, I will tell you, it's relatively simple, straightforward, right? You need equity, let's say 20%. You could have some investment tax credit, let's say 30%. and you then remaining balance of 50% of long-term debt, which because this is a very reliable, mature industry that can deliver power at a lower cost in a timely fashion, there are certainly, we are very happy to work with our founders. We took money from PNC before. Now we took a loan from Royal Bank. There's a few names I will not be able to mention. We feel very comfortable how to finance the rest of the pipelines in the next 3 to 5 years.
Promising indeed. Speak to me now about vertical integration, because as some history has shown, it can be both a strength and a potential burden. How does your integrated model specifically drive profitability?
Yeah, Kamal, it's a very interesting you asking this question. I remember early days that we got listed in NASDAQ April 1st last year, and I was doing my non-deal roadshows, and I was with major banks and institutional investors on Wall Street, and very nice meetings, and because we are new to the block, right? And the professionals look at us to say, you guys are making a lot of money on doing community solar, right? Your margin as a developer is tremendous. Why you carry all of those things? Why don't we just make the money and move on? I think it's a very, very good advice, for people that to tell us what's the best way to making money, right? I came back, sit down with my board, look at this one. What is SolarBank, right? SolarBank is a company that in this for the long run. Right? We are here to deliver the power that is needed to keep the lights on, to keep us connected. To do that, what you do, because electricity price is determined by the market, determined by the regulator, right? To be truly successful, we have to take care of our end customers' needs, which is timely power at a lower cost. Right? So if we break down all the 4 stations, such as development, construction, operation, and the ownership, every transaction, there's a transactional cost. Until you do a vertical integration that you can actually have a synergy across the production line that you will take out all those profit taken as an intermediary. So suddenly our interest as a company is fully aligned with interest of our customers or we ourselves as a independent power user, right? So that's why we said, thank you for the advice. We understood, but we are set for this A to Z approach, right? Now come to the burden. It is a burden if you don't keep your production running at 120%. Right? You think about it, you don't have project going, your EPC people sitting and waiting, right? You don't have operation maintenance, and then the plant is not producing, your IPP result is bad, right? So the way we are keeping it full tail in terms of operation is we have a lot of projects going through the production line. To give you a single example, we have revenue per capita about $3 million. Imagine, right? That's what we do, right? So by setting up this vertical integration, give us the ability to managing the cost, to managing the timeline, to managing quality and reliability, most importantly, to increase the throughput. So that's why we can deliver power at a lower cost in a timely fashion. So for us, actually, it's a blessing is that we can weather the differences, not depending other people give us projects to keep us going.
Amazing. And thanks for clarifying, the cost quantification there, the advantages of that and how it provides the competitive edge above everybody else out there. You just explained those numbers really helps us understand that. Now, your team has over 100 years of combined experience, but the renewable energy landscape is rapidly evolving. How will you be adapting your strategy to address emerging technologies and market shifts that we might not even see today?
Yeah, that's another great question. As I opened by, the human history by taking the light from the sun all the way have electricity, keeping the lights on, is that the fundamentals did not change, right? But the mechanisms to make it more efficient, more reliable at a lower cost is really the challenges and the opportunities that we in this industry need to upgrade ourselves towards, right? I remember when I started my first project in 2003, it cost me $6 a watt. Today it costs us probably, anywhere between $1 and $2 a watt, right? How do you keep your current? You're making sure that you understand the technology. You're making sure you use the best engineering design for production. You're making sure you're managing the processes from a production perspective, right? So those are all, ways that we, by doing operational excellence, and drive the company forward. Now comes how do we proceed with the market. In the past, we do some projects on the rooftop, providing some ancillary services. We do community solar. We do EV charging, in the transportation business, right? And we do large scale utility. However, if you look at our announcement getting into the data center, we don't have to do that. We can say, yeah, everyone's waiting. We can wait for the wire, for the grid to be upgraded and saying, but we are not. That's not SolarBank, right? We are very innovative and we are very creative. We sit down with the partner to say they want to sign a PPA, buy power from our solar farm, that interconnection is the bottleneck and infrastructure renewal is the bottleneck. They have to wait. And we say, well, is it possible we build it on your side, or is it possible you move your side, to our side, right? So that's truly, I would say, innovative thinking to moving together with the demand, right? I'm sure in the future that you will see we're getting involved in other forms of energy, because at the end of the day, we are a power company. We have done gas turbines from a combined heat and power and cooling perspective. I come from utility in Ontario. Nuclear power provides more than 50% of the power. So I do have connections and knowledge about how it works. We might get into SMRs, small, medium nuclear reactors, right? We know hydro. And at the end of the day, is how do we take all the above source of energy to service the need in a timely fashion. So that's where we are, and quite happy to be in this business, actually.
Looking forward to catching up as you develop and move along this journey. But with your diversified portfolio, as you mentioned, across solar, BESS, and EV charging, which particular segment do you expect to be the primary growth driver over the next 3 to 5 years, and why?
Yeah. I think that's a really good question from a macroeconomics and the microeconomics, right? From a macroeconomics, the Ontario study says in the next 25 years, the demand will quadruple. So that because of the demand, energy generation will be our top priority, whether it's solar, it's wind, or other clean sources as gas turbines and so on and so forth. So I would say solar is the number one. So now if you look at those ones, because of the time factor of this energy, there are differences between peak and non-peak, right? So I would say second to generation will be battery storage. That's why we are building large scale battery storage that to keep the supply at a reliability, right? I think, from my perspective, I would say because of this supply demand, that generation is number one and storage is number two. So now we come to transportation. In transportation, there are countries, they don't have much fossil fuels, right? So they probably will be more advanced, such as European countries that are more on EVs. And so the EV charging will be more advanced, more popular, more prevalent, right? But in North America, as in Canada, Alberta is full of oil and gas. And as Mr. President just said, they have liquid gold under your feet in the States, right? So from that perspective, I would say we will moving forward together with industry to meet the needs. Should there be a need for EV? We're right there already. We're currently building with Walmart sites, right? Should there be a delay, that we will continue to supply power from a non-emitting sources.
Awesome. So you've also established partnerships with corporate clients and municipalities. Walk us through your typical contract structure and how these partnerships translate into predictable cash flows for investors.
Kamal, when I started the company, coming from a utility background, we do realize that as a corporation, that you do need to be responsible for your stakeholders. We are here not only to make money. Making money is our number one goal. We have to make money. But in addition to making money, what is our social responsibilities? What is our environmental responsibilities, right? So from that perspective, start very beginning, we were able to working with the municipalities that instead of municipality raising taxes on their residents, we enter into business arrangements that, so that part of the tax revenue can be replaced by business revenue from, relationship with us. The advantage over there is that we incorporate ourselves into the municipal planning so that we know where are the best places for the energy generation. We're not taking on agricultural land. We're not taking on future residential land. We're not taking on the future corridors and so on and so forth, because this investment is a 35 years horizon. Right, so that integration is very good. So that when we get into permitting, when we get into social responsibilities, the municipalities actually give us advantage that to see that we do care, right? So it's not like we just here to make money and we move on, right? So that's with the municipalities. First Nations, as you know, in this country, they have been disadvantaged, let's say, right? And they have their rights and they have their contributions. They have a lot of, I would say, claim or control of traditional land, right? By working with them, we're not only redistributing the wealth to the people in need, but also we bring them out of the existing conditions that depend on the land, which we now providing additional use of the land. Right, we actually have very good First Nation partners that not only bring in support, but also tell us where the best places in harmony with the environment, right? So those are the ones I would say, compared to pure play by ourselves, we will say we expanded the business, into much larger territories so that we can bring more, environmentally friendly generation online with the support of municipality partners and the First Nation partners.
Thank you. So we've just also discovered that you'll be attending the Microcap conference coming up on January 28th to 30th in Atlantic City at the Borgata Hotel, Casino and Spa. Now, obviously you attend various events, but what part of your growth story do you believe investors might be overlooking? And then how do events like the Microcap conference help you to communicate these opportunities?
Yeah, I'm actually very looking forward to my speech. I think it's on Thursday in the morning at 10 o'clock at the micro conference, right? We are only 2 years into public listing. We're only shy of 1 year in NASDAQ. So we do need to share our stories to people and, can get more awareness of us, that as not only a renewable energy, but it's a solid investment opportunity. If you think about that, we have always been cash positive. We have always been delivering. Our top line growth is really significant. If you check our filed financial statement, you will find, different from most of attendees, which is a pre-revenue, pre-profit, pre-assets, and which we actually are post-revenue, post-assets, and the post-profitability, right? So that's one of the areas I will certainly highlight as an investment target, right? On the other hand, as you know, because of the changes in the sentiment in the marketplace, we need all sources of energy focusing on fossil fuels, oil and gas, and coal, focusing on nuclear. And I would say that's to our liking, because it's only when that all source of energy is brought to the market, we can advance our industry much more faster. But however, it comes with a timeline, right? If you think about a timeline for nuclear delivery, probably 10 plus years, for oil and gas and others, probably 5 or 7 years, and even gas turbines, probably 3 or 4 years. So what do you need now, right? I think for the interim, for the short term and the immediate future, it is the solar, it is the other sources that we can deliver to the market. So I'm hoping to share with the attendees that there's a continuous strong drive for renewable energy. And I think the perceived risk putting on solar is probably time to be dismissed.
Excellent. What a wonderful way to close off the conversation. The future is definitely bright with SolarBank Corporation powering our days ahead. Thank you so much, Dr. Richard Liu from SolarBank Corporation. He is the president and CEO. Do make your way to the Microcap Conference. Come say hi. The Harvest Podcast will be there on site, doing exclusive interviews with more amazing companies. But do come and watch Mr. Richard Liu, Dr. Richard Liu, in Andy's presentation on Thursday. Thank you so much, Doctor, for everything, and all the best. We will see you soon. You guys stay tuned for more.
The Bell2Bell podcast is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. You should assume that the owners, officers, and directors of IBN or financial analysts mentioned in this production may hold a position in and may intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used in statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please see IBN's full disclaimers and disclosures at www.ibn.fm/disclaimer. Music in this episode is by Infraction. For more, visit inaudio.org.